The following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Tommy O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials up 28. Nasdaq's up 3. S&Ps are up 1. We have the gold contract down $4.50, trading at $1,326 an ounce. Silver's off 2 cents at $19.14 an ounce. Light sweet crude up 69 cents at $45.36. We got crude oil numbers coming out.
10:30 Eastern.
Man, this week, give it one day, you're either up or down $1.50 in oil.
Yeah? Oh, yeah, definitely, for sure.
Pretty
Big
wild.
moves, I know.
$1,500 per contract. Gotta love it. Bonds, the 10-year note up 1 tick, 131.18. 30-year bond up 3 ticks, 169.17. And good old King Dollar. King Dollar's up $1.33 at 95.44. Volatility continues. We're coming into window dressing. We'll find out whether they can dress it all up or we're going to have some broken windows.
And I thought you were going to say that, like, the Dow was 150 either way when you went to that oil, which was which is right, too. That's what I thought you were saying. We'll see if we get there today.
It has been. And the Dow and the S&P, folks, it's going to be, you're going to get a lot of information out of the marketplace today because both of them want to test the bottom of the gap from when they gap down on Monday. And that's the second gap down. So,
Yellen's talking today, too.
Yellen's talking
that
about...
provide some volatility.
That's right.
Sure.
Oh, it will, banking regulations. That's the bottom line. Let's go.
Very topical, right?
Yeah,
in terms
right.
Of Wells Fargo
banking regulations. Give me a break. They got it made. Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim. And don't forget, folks, every trading day right here at TFNN, you want to understand options upside down. Well, guess what? You can not only do it, it's on every day, 12 to 1 Eastern Standard Time. No matter where you are right now in this great country of ours, if you're listening in your car, you can get us right on your cell phone. You go to TFNN.com, hit Tiger TV. You're going to get some great video, HD video, as well as audio. Kevin and Scott, swim lessons are on every trading day, 12 to 1 Eastern Standard Time. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. Tom, I'm sensing a little skepticism in your tone when talking about Janet Yellen and banking regulations. Am I getting that right through the phone lines here?
I think you're definitely getting it right. It's like the whole thing has turned so far over the top. It seems that it's like wow, it is that I mean they don't have a strategy, and it's like okay, are they going to go up in December? I mean the Fed Fund futures rate says yes they're going to, but guess what? If this market takes a hit, man. They're going to be like a deer in headlights, and I suspect that, they'll run the other way, which makes yes.
Since the Fed meeting, where they didn't raise rates,
right,
the percentages of a Fed December rate hike have actually gone lower. It's moved the other way. So now it's right at 50-50.
Yeah.
It's like 51.9% was the last time I looked. I didn't look this morning.
Okay. Yeah.
So what the money bet on is saying is that there's still a lot of play between now and December.
And there's a lot to say about what way it's moving, too, right? Even though it's over at 54, it wasn't 59. So keep in mind that, that's where the money's flowing right now.
It is. Yeah. It is. And, and what is amazing, I mean, December, that meeting is only 12 weeks away.
And there's going to be so much that happens in between that time.
Oh, my God.
As Kevin was saying it, I was like, man, that's just such a power pack 3 months, 2 months.
It is. It is.
It's barely 3 months, really.
No, which is hard to believe in that context. You know what I'm saying?
President coming in, then that getting digested in the markets, whoever comes in.
Right, and today, guys, at least, the last time I checked, it was 6 Fed members speaking today alone out there.
I keep seeing the headlines,
So it's going to be, really clearly, if you look at a calendar of this week and the speakers,
yes,
the Fed quiet period is over. We've gone in now to the Fed really loud period, where they're talking. Everyone's out there on the stump talking.
They are, man.
You're going to get a lot of rhetoric.
Yeah.
I don't know if movement, but you're going to get a lot of rhetoric between now and the end of the week.
We are. And, this market, it's so intriguing because, of course, the NASDAQ and the NDX 100, I mean, they're at highs, and they rejected their lows yesterday, and they're in a higher level. But that Dow and S&P just can't seem to get the traction. So it's going to be like one of them, either the NASDAQ's going to come down, folks, or the S&Ps and Dow are going to go up on that other level. They're not going to hang out here for a while.
Something's got to give.
Yeah.
But today's the topic for today's discussion is one of our favorite ones that we like to talk about because, people like to paint a rosy picture about investments. But today is trade repair. What do you do when the trade breaks bad? Right? How do you turn a bad trade into at least a stable or even a winner?
Yes.
In trade. So that's what we're talking about today.
And folks, every trading day at 12 o'clock, okay, they got an amazing program. And if you've ever traded options and you want to trade options, it's a great place to learn it upside down. The learning out here today with the trade repair is absolutely huge. Because I remember, Kevin, when I first started trading options, it was like, okay, so what do you do with this? And then the first time I realized that, well, you can actually do something. And this is, I'm talking about a couple of years after I was trading options, because it wasn't the same like now. Do you know what I mean? That you could tune in. And it's a big deal.
Yeah.
Because you're making a choice to lose less money. That's
in the long run, that can be a big change.
And you have more time.
Sure.
You're talking about time, and you're talking about, and it's easier to make a choice.
Minimizing those losses.
Yeah, totally.
Keeping the dream alive.
Keeping the dream alive. Oh, baby. 12 o'clock right here. Thanks, Kevin.
Have a great day, guys.
Have a great one. Have a safe one. Stay right there, folks. Tommy and I are coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is up 22. You get the NASDAQ. Let's see. NASDAQ's flat. S&Ps are also flat. And, thus far you had the S&P and the Dow test the lows of the downdraft, and they haven't been able to handle it. So this is going to be interesting watching this whole thing shake out. Oil, we get oil numbers at 10:30. This has been quite a run with oil in the last...
talk about some action all the way just even from like 6:37 in the morning.
Right.
Talking about 44.80 up to 45.50, down to 44.80, up to 45.50,
and
down to...
Yeah, and at 10:30. So we're going to get the numbers, folks. And if you haven't test drove the Nadex platform, folks, great time to do it. Come over to our website at TFNN. You can hit the banner. It's either on the top or the side or both. You bring up the platform, the exchange. They'll put $25,000 of paper money into your account, and you can see how these defined option contracts trade.
So just out of curiosity, looking at these are the 11 a.m. spreads, and 45.35 is about where we're at.
Okay.
There is one where 45.50, so you're talking about only 14 pennies away, can become your floor and your ceiling, kind of where
Which
that's
is pretty cool.
Yeah, so you'd have from 44 up to 45.50, or you'd have from 45.50 up to 47. So you'd have $1.15 each way. So, if you were looking for huge volatility, right, you'd be selling the one where 45.
Let's see what happens.
Yeah, that's it. So 45.50 being the ceiling. Would want to sell one contract there.
Yeah.
Now you have some value in here. You're selling 45.50. You have 14 cents of intrinsic value because you're selling at 45.50 and it's at 45.35. 15 cents, now 17 cents. So that's why you're going to be risking 28.
Right.
Because you have 17 cents of value there if it expires where it is.
Okay.
So there's your 28, and then you'd be buying the one with no intrinsic value at all. So this is going to be the cheap one because you're buying it at 45.50 and it's trading at 45.31.
Yeah.
So that one's only going to be $12. So about $40.
$40 gets you both sides.
And that gets you both sides, which is going to be 40 cents away from 45.50. So you'd set up a trade there, basically, where you could have profit anywhere from 45.10 to 45.90 outside of that range.
45.10
is where your profit begins, right? 'Cause
okay.
that would be 40 cents away from 45.50.
Yeah.
And then 45.90 to the upside is where you'd start taking profits all the way up to 47.
It's pretty good. It's
Yeah,
particularly
not bad
good
with the types of moves that we had.
With
right?
the types of moves that we had, exactly. Yeah, let me just put the Bloomberg up just for a second. So if we look at, I want to look at the USO, just how it traded this morning.
Sure.
Oh, interesting. So what has happened with the USO, and same with the oil. Okay.
And just you had said to me, there's an OPEC meeting in Algiers right now, right? And so there are even headlines I'm seeing right now. OPEC must show the world it can work together. Algerian minister. So that's probably what's driving that huge pre-market action. Just to put it.
And they know the numbers are coming out right now
what's
too.
going on? Yeah, and they're all news-driving events on their own. They're all just coming all at once.
Right. So check this out, folks, because the USO, which is the ETF for the oil market. Bottom line, it gaps down yesterday, gaps up today, goes right into it. Let's see. So the bottom of that is
we're quite there.
1041, and we hit 1036.
Now, I think you're looking at again different. Oh no,
well,
that's
the equity. Yeah.
I was just seeing different numbers, but yeah.
Right. If we
the ETF, right?
Yeah, the ETF. If we go into the contract now, let me see this. This may be the one. I think this is probably the one. This is the November contract. Second. Okay, so go into 2 days. Right there. What is that? That's high. That's 45.37. This is interesting. So the way the contract is looking even intraday here, when we came off that bottom this morning, that had some juice, man. So, to me, even though we're at these,
so you might just take a bullish trade.
It would be bullish for me right now. Yeah.
And that would be the trade where you could have a really small risk, because now you could go either side. There's other ones, but just using this example that I pulled up, where that's the side of the trade where you're only risking 11, because you only start getting value at 45.50, right? Whereas it's at 45.30. That's a good reward
that's
trade.
pretty amazing.
Now you got to get in at 45.61. It's trading at 45.31.
Right.
So you have 30 cents it needs to move before you start to reap any profits, and you get nothing back below 45.50.
Right, and it's already moved 60 cents this morning. But so
from its lows for sure.
This is gonna be wild watching this thing shake out.
Now the other side, if you didn't want to pay as much premium, I mean, this is one that's going to be almost an even max loss of 58 for a max profit of 92.
And that's a 44.75 to 46.25.
And you're almost square in the middle. Square in the middle is going to be 45.50.
Yeah.
So you're slightly below it, but that's not a bad trade either in terms of, only risking, you're risking 1 to make 1.5.
Right.
And you're only paying 3 to 4 pennies.
Yeah.
Which is cool when you, in the long run, if you do that trade a lot, and you're getting huge movement on either side, right? I mean, you're going to be making the 90 and losing the 60, and making the 90 and losing the 60, right? And your only risk here is that you're not making the 90 enough to make up for that 4 cent. Yeah. Not bad, right?
No.
I mean, just to keep your options. That's not bad at all. Especially in, for that, though, you'd be looking for volatility. The way you're going to lose money in the long run there is that you get like no market action movement.
Right.
And then that 4 pennies is going to eat you up from where it expires. But now these are only 11 a.m.s too.
Which is what you want.
It is, because that's why you're only paying 3 or 4 pennies.
Right.
Because you only have 35 minutes. But when you know that the news is coming out and you expect some market activity, that's a nice trade. I mean, that they don't always line up as perfectly.
No.
For like a simple risking 1 to make 1.5. You're risking 60 to make 90.
And when they do, though, it's beautiful. So let's see. So what will end up happening is that, let's see.
There's your, is this a live?
Yeah, there we go. So what is the expectations there yet?
No, I don't see. I mean,
we'll keep that up. We're going to keep the live one up because these live feeds are this a live feed for Algiers?
No, I think this is the oil and all.
Yeah,
because it's talking about
EIA
some of them.
report's going to come out as OPEC is holding informal meetings in Algiers to come up with some consensus as to how to.
Oh, I'm sorry.
That's all right. That's how to restrain production and support prices. The group isn't likely to reach an agreement in Algiers based on the comments from Iran and Saudi ministers.
I was just already jumping even down here trying to figure. Just because this is one part of it, right? The Bloomberg's weekly analyst survey predicts distillate supplies rose 500,000 barrels, so that's not going to be the top line, but they really break that down in terms of if you understand that market.
There we go, right there. American Petroleum Institute
That's the
report.
API.
Okay. Is that the one that came out last night?
I think so,
That always comes out the night before. Right.
Yeah, and then this is just the beginning of it, so we'll leave that up. And yeah, we go to break in about a minute.
And if we go take a look at the XLE, this is where it's going to get interesting because the XLE continues to have downward pressure. Yesterday, the volumes in the marketplace, folks, yesterday were weak, but yet the XLE had an expansion of volume. We got low at 19 million. You're going into 14 million, and you get a bounce out here today with 2.9. So. You stay right there, folks. Tommy and I will be coming right back. Dow right now is up 9. You get the NASDAQ flat. S&Ps are also flat. So thus far, the Dow failed at that gap. The S&P failed at that gap. NASDAQ's on its own, man. NASDAQ doesn't have any fringe
just yet. We'll see what oil does.
Yeah,
oil spikes down. This market could be in trouble.
There's no doubt. Tommy and I coming right back, folks. You stay right there.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focus Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go look at these oil numbers. What we had, oil just went from 43.40 to 45. No, 45, yeah. 40 to 45. It's like 79. Right now we're at 45.54.
And so it came in at 1.8 billion barrels.
Okay.
And the median estimate was 3 million barrels. So 1.2 million barrels under the top line estimate, which is probably why that immediate quick spike up. And then guess what? Everyone's reading deeper into the report, I think. And so you jumped around from that live feed. If you want to pull it back up, it's not up right now on any of our screens. Okay. That's all that's going on.
Let's see what we got.
You just pull up the news, I think, of the crude oil contract.
CLX6. Beautiful. Okay.
Yeah, so here's everything coming across in terms of, fuel demand fell 1.4%, crude oil output fell 0.1%, gasoline demand fell 1.6%, ethanol output, jet fuel demand fell. That's interesting. Jet fuel demand fallen 5% in the past 4 weeks. Now, I wonder if that's, you hear about the talks with people flying less, whether it's international, whether it's, that's a big number. I don't know what there's probably so many things contributing to jet fuel, but that's a big number, 5%. Yeah, and so these are crude oil inventories fell 1.8 million barrels, gas inventories rose 2 million barrels, and distillate inventories fell 1.9. But the big number was that they expected 3 million barrels crude, and they had 1.8.
Let's go back to the. So look at that. So on the this is pretty cool because on the trade that would have been both ways.
So this would have been your worst fear, is that 45.50 is your max loss there.
Right. So it's good to know, though. That's
it's essential to know.
It
right?
is. It is. And what we're talking about, folks, is if we had gone both sides, which we do sometimes, okay. It would be 45.10 to 45.90. That was your Give it a second.
Basically, what happens is you would have had $40 per both contracts.
Right.
So you start having value anywhere away from 45.50.
Yeah.
So at 40 cents away from it on either side, you get your money back. And then any more movement outside of that as it's approaching,
Look at that.
That is wild, the spike up. We talk about this too, right? In terms of, well, what if you just decide to take back value on the positive side?
Right.
And then you have your negative side still remaining.
Yep.
That, guess what? If the market swings back, as it can do very often on these news types of events, then you're able to get value from both sides of that trade, which is pretty cool.
It's amazing
when that can
actually.
happen. Yeah.
Because what we do know is that it moves quick, but the fastest of the moves even here, when you're talking like, so we've already had a range of approximately 70 cents. You know.
And what do you mean, like all the way up?
Just on this one bar. Is that a 5-minute bar?
These are 5-minute bars.
Yes.
Just up and then down. You're talking about?
Exactly.
Yeah, both ways. Right. Yeah.
And
it would be even more than that, just to put it. I mean, it's 50 cents on the way up.
Yeah.
And like 60 cents now, almost 50 cents on the way down. So you're talking about $1 if you got both sides of.
Right.
It is, because you don't get. You're talking about only a $45 commodity, and you got 50 cents movement up. That's more than a 1% move up, pulled back immediately within the span of 5 minutes.
Right. And you have another 26 minutes, folks, because what happens, we're at 10:34, and these expire at 11 o'clock.
That's a lot of movement. You got 4 more of these bars to put it in perspective, right? No, 5 more of these bars.
Right.
And they won't compare with this bar, but they could have some big movement on their own.
No, and I suspect they will.
Especially, I was just going to say, it's gaining momentum. This isn't even choppy. It's just turned around and going straight down.
And what happens is that when you're at the top of the range, which we are right now at this $45 level, what it needs real conviction to get over those highs. And guess what? It had the first get-go, but it looks to me that
it's going to have to do another U-turn to make it back.
It does.
Yeah.
It does. And that's a lot harder when traders are sitting there saying, well, you know what? We got a good price right now. Algiers meeting's going to be over. I don't know if it's today or tomorrow.
Maybe that big jet fuel number is a big number. I don't know. There's a lot of smart people that break down that report, but there's something in that report that those traders didn't like to turn that around and say this is not going higher. It's not that big of a deal, even though there was less inventory, which in theory, that sends the price higher no matter what. Market thought 3 million barrels. There's only 1.8. Whoa.
Right.
Price is going to go up a little bit.
Right.
Except for the fact maybe demand fell.
Demand's going down.
Yeah. Well, that could be a much bigger deal than 1.2 million barrels if demand is falling off.
You don't have demand, it doesn't matter.
That's it, yeah. 1.2 million barrels is nothing probably in the context if you have demand, right? But guess what? For sure.
877-927-6648. Let's go take a look at the Dow and the S&Ps. The Dow got to a price point of 18,281, and the number that was tested, folks, was 18,254. Thus far, it's failed. This is going to be the second time if that's what we get, and it's pretty intense because the September 9th downdraft, that's what stopped the Dow and the S&Ps in its tracks in about 2 seconds. This gap here for Monday is a tiny gap, so the strength of that gap is not as large as the first, go down.
Yep.
The SPY, the number we were looking for, the test on the SPY was $215.88, and thus far that has failed also. So we go over to the NDX. As I said a little bit earlier when we were on with Kevin, before you can really get a pullback, though, the NASDAQ has to basically tell us, can the NASDAQ pull up the S&P and the Dow, or is the NASDAQ going to pull back itself? Thus far, the NASDAQ's hit $118.72, and I believe this is going to be wild if it's going to do the low of it. Yeah, it is. Okay, so the low of the high bar is $118.71, and your volume there is 22 million. So we'll see if that's what the NASDAQ is trying to do, meaning test that level out. Let's see. Today's Wednesday, right?
It is.
Okay, so we got Wednesday happening. Realistically, tomorrow starts window dressing.
Okay.
Maybe let's start breaking some windows instead of getting them all dressed up and pretty. It's unusual, but it does happen. That's what it comes down to.
Oil's just right at 45.
Oil's just staying right there. Yeah. Let's go take a look at some of the strength versus the weakness inside the Dow Industrials. This is what you have. The strength out here is Caterpillar. That's up 1.6%. Home Depot's up 1.1%. Apple's up 0.9. The weakness is McDonald's. That's down 1.9%. Nike's down 1.9%.
How about Nike? Let's take a look at Nike. We were talking about them yesterday. And
we were.
I was watching them after hours, and They had some trouble.
They
even though they had good numbers, right? That's what I'm talking about. They had trouble in terms of the market falling back. But
that's
it seemed
right.
like initially same deal that they had some bang out numbers.
The numbers that they came out with for this quarter were huge. I mean, they beat big time.
Okay.
And what they come out with though simultaneously is that they're going to miss the future orders. Look at that. The estimate was 56 cents. It's bottom line. They made 73. It's a big number.
It is.
But what also
revenue 9.06 billion versus 8.88.
Isn't that crazy?
Yeah.
Huge.
You're talking about that's almost $180 million extra in revenue that they took in?
In 90 days.
Right.
In 90 days. It's unbelievable.
Yeah.
You stay right there, folks. Tommy and I are coming right back. Our phone number is 877-927-6648. Dow right now is down 8. Nasdaq's off 6. S&Ps are off 2.5. Hold on, folks. Hold on for the ride.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So we have the Dow Industrials right now down 3. The Nasdaq's up 4. S&Ps are off 1.5. And as you come over to our website, folks, check out the Everbank banner. They have the Market Safe Focus Commodity CD, and these are always unique products they have.
Yeah,
man.
they really are, man. I tell my friends about these, just because people don't know about them, and they're great ways when you talk about CD environment, right? Your only opportunity cost in something like this is what you could get in maybe another CD, whether that's 1.5%, 2%, whatever it is. You're not going to get that. All your principal's guaranteed here, and you'll get how much? Yeah, 50% of the upside of these in here. And what are we dealing with? I know you just pulled it out. Here we go. Gold, silver, copper, nickel, soybeans, and sugar.
That's right. They put that in a basket.
Yeah, gold, silver, copper, nickel, soybeans, and sugar.
Right.
Which is a great deal, man.
It is.
It's a 5-year. Is it? Yeah, 5 years.
5 years.
$1,500 to open. FDIC insured. IRA eligible. So your principal's protected. Worst case, you'll get back in your investment, whether that's $1,500 or whatever it is.
And in this low rate environment,
if you have money that you don't need for that time, right? I would suggest contacting.
Or if you're in the CD market,
and that's what you're looking for. Exactly.
And there's not a limit, folks. You can put 20,000, 50,000, 100,000. The bottom line is that what is cool about this is that so it's 5 years. Each year. So the opening date, the issue date is going to be October 24th.
And that's why the funding deadline is October 13th. Because they corral everything when they have, and they create this instrument.
They create the instrument.
Yep.
And then every year, a year from October 24th, 2016, they'll see what the prices are.
Yep. Annual pricing.
Annual pricing. And if you can get up to 50% of the upside. It doesn't mean they'll all go up. Some will go up, some will go down.
Yeah.
Bottom line, though, that happens every year. So what also happens, which is really cool, is that I remember the one when they did gold and silver.
Yeah.
This goes back 7 years. Now, what happened? Even though that the gold market
because this one matured just a year and a half ago. Just to go ahead.
That's right. Yeah. And then it came down viciously.
Yeah.
Okay.
And it had already come down. Actually, is what happened.
It had. But they made money
because the first few years, whatever it was, there were huge gains.
That's right.
You lock in those annual pricing dates, and then when it pulls back, it could actually be at the exact same price in 5 years.
Right.
And you have locked in gains.
Exactly.
So, which is really cool. It's just not where it is in 5 years. If you get some good years in there, you're locking in those annual pricing of 50% of that year.
Right. So you can check it out right in the front page of TFNN, folks. You can also give them a call at 855-750-4051. So just to go over it again, the funding deadline is October 13th in this instrument.
Yes.
It's $1,500 to open it up. Your principal is 100% protected. You earn up to 50% of the upside payment at maturity, FDIC insured and IRA eligible. So.
Yeah. It's cool. So you go over there, and what will happen is you open up an account with them, basically, right? And then that way that you can do this. And then they have awesome products coming out all the time, as people know if they listen.
There's no doubt.
So whether we have commodities here, but they always have awesome products. So it makes sense to have an account over there, for sure. Beyond this.
Our phone number is 877-927-6648. Look at the oil market. Oh, look at that.
And we still have 14 minutes until 11 a.m.
And right now, oil's at $44.94, folks. So
would be 16 pennies in the profit. Make that 20 penny, 19.
That's pretty cool, man.
Yeah.
I like those trades.
Yeah, and so just to put it, this is the one that would have been the positive side, because that's now worthless.
Yeah.
And we would have been in the one with 45.50 as the ceiling. And yeah, you can see that one's trading now at about 45.90. Which is right, it's going to be pretty close to where it is right now, only because it's pretty close to the middle of that spread, which is 44.
But oil is getting some acceleration to the downside.
I mean, you could get a full value out of that. It's only 75 cents lower. And with 15 minutes left, that could definitely make it down to $44.
Oh, yeah. Listen, it's going after...
Just to put it in perspective, this is 44 right here. That's not that far in 3 of these bars.
No, because it's going after break and it's swing low from this morning.
Yeah.
And that's, there's going to be a lot of people that were in there that will have sell stops underneath that level. So
yeah, I would not want to be long right now.
No.
In terms of just to put it in the perspective, right? If you were long, would you want to be long as this
breaks? No.
That's right.
No.
So just from a common sense.
And particularly because what also happens, I don't know what time it is in Algiers, but I suspect in Algiers they're going to be finishing up that meeting too.
Yeah, there could be news coming left and right, right?
Yeah. So it's like, okay. Now the oil market in general, let's see, the XLE is up 16 cents. The XLE is having a hard time, folks, period. Like ExxonMobil and Chevron are just basically telling us that it seems that they will want to slow a price. I mean, look at Exxon can't get out of its way, man. And,
it's a rough one.
It's, Exxon just went from 95 down to 82. Oh, hey, Wells Fargo. Let's switch gears here for a second.
Sure.
41. So the board.
I heard.
Did you see that?
I heard. I was listening to John Logan start off the show today, too.
Yeah, so I did hear him.
Good,
I did hear him. I suspect what's going to... Okay, so the news is that Wells Fargo chairman and CEO is giving up $41 million in uninvested stock compensation. Unvested stock compensation and his bonus for 2016. What's going to happen here, though, folks, this is always like the beginning.
Yeah. He's doing that in his own self-interest, just so...
Yeah, to try to keep his job.
His own self-interest is to make as much money as he can.
Right.
So just keep that in perspective. That's an investment in his own future of taking more money for his salary, for his stock options, to keep his job.
Totally.
I mean, it is.
It is. No, it definitely is. It definitely is. Let's go to Reddy in Mount Vernon, New York. Hey, Reddy, what's going on?
Hey, Tom, great show. I've been a regular caller. I'm looking at Steel, Yax. And I've been long since it was around 1650.
Okay.
And I wanted to know how high can it hit before it starts to downturn again.
Let's take a look. So $6.15 the low for the year. $27.64 is the high. We're looking at U.S. Steel, which the symbol is X. Okay, so you're right up to ice right now. Yesterday, you got light volume. Let me see this thing. Put this on a weekly for a second. Yeah, see, I like what it looks like on a weekly. $20.99. Okay, so $20.99, it's going to get into some real flack here. And what it is, that's where, when we had come down Reddy from $26 to $20 there, and 99 cents, it has some big volume. Now,
it's August 12th.
Yeah. Last week, it did good. I mean, it had good volume last week.
Yes.
This week, 38 million. It's Wednesday, right?
It's the beginning of Wednesday, too, kind of. So
it is. So
that could...
Let's see what we're doing. Yeah, we're doing 16 million, 15, 34, 5, that's 75
it's close.
million.
I mean, with 3 trading days left out of 5,
right.
that could be...
I would put a stop pretty close here, but you could probably get a run up to that. It's close, man. $23 is game, though. That's kind of how this is shaking out. I think I'd keep your eye on this market today because what you do, I think steel's off the bottom, number one, okay? But what you have here is that if you get a failure in the Dow and the S&Ps, like it looks like it's going to happen, it'll grab everything down, man. Do you know what I mean?
I agree. If you have a minute, Tom, thank you very much.
You stay right there. You stay right there. Yeah. Well, Tommy and I will come right back. We have Dow down 16, Nasdaq down 10, S&Ps are down 4. We're going to be right back, folks.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. You get oil down there at 44.60, so...
I'm going to blow that up a little bit, even make it look even bigger.
Oh, my God.
Yeah. I mean, that's quite a move, for sure.
It is quite a move. We have Reddy from Mount Vernon, New York. What else are we going to look at, Reddy?
Hey, Tom. Thank you for taking my call back again.
Absolutely.
I am thinking of CTAS, CTAS. I've been looking at this chart, and it looks like, it's about to come down anytime. I mean, I don't know when, but the chart really looks good to me on the downside if it ever turns downside. So
okay. So CTAS folks, they come up with their numbers last night. They were good numbers. They're a restaurant supplier. The fire protection, all of the above. I wouldn't be shot in this. So this is what this is. This is a longer term ABC structure on the way up, and it's a confirmed ABC that started in April of 2014. I believe I was doing this last night. Yeah, 1 second. I got to bring it back further. So the projection, this is a long-term one. Now what happens is this. Is that April?
Yeah, it started in April 2014.
Yeah, it started in April 2014, and as it was taking swing points out, this
like November of 15.
Yeah, this is a classic that you're going to see. It moves higher, has the volume. So approximately, I didn't get it right down. It's around 121. Okay. And what does happen after an ABC up, okay, is that, you'll get a pullback. But that wouldn't be a short candidate ready. What you would do is that you'd wait for the pullback. It may do multiple ABC up. And so to me, that wouldn't be a short candidate because it did the ABC up. It has the volume. There's going to be easier ones out there that are at highs, but they got to highs without volume. You know what I'm saying?
Okay. Yeah. Can you give me those ABC points, Tom, again? Sorry,
it's April CTAS.
Yeah, April of 2014.
April 2014
is the first A. And then you're looking at like November of 2015, I think, would be the B.
And then
and
then you're going to see you took it out right here.
No, but wait.
I get it on a weekly.
C would be in like February of this year somewhere.
Yes.
Yeah.
Whatever the swing low is there.
So the C is going to be like 80.
Yeah, and then you're going to see. Now, what's really cool about this chart is that if you have the out of time in the trade, you know that when you push swing points with volume, even before it, most of the time you're going to take it out with volume. And you can see that's what this did. This was pushing swing points with volume.
With volume, yeah.
And every time it pushes, didn't make it for a long period of time, like almost 7 months, going sideways. But the push was there, and then all of a sudden, it just had enough. And when it had enough, it goes topside, then it goes topside again with huge volume.
And starting out with like July 1st of this year, he was looking at.
Yes.
Yeah.
And then July 1st, the week of July 1st, the week of July 27th, the week of August 19th, and then even 2 weeks ago.
Yeah.
So when you see that, with equities, most of the time they want to go a lot higher. When you see it when they're pushing on the way down, guess what? That's pressure. That's not you and I selling. There's a large mutual funds, hedge funds, all the above that are selling into the marketplace. Randy, you have a great one and a safe one, man.
Thank you very much, Tom. Have a good day.
You too. Bye-bye. You stay right there, folks, because our man, Mr. Basil Chapman's coming up next. Of course, then we're going to swim. I think it's swim headquarters in Chicago. Chicago Cubs, man, they got Joe Madden. They're the best record in a long period of time.
Theo Epstein, right?
Yeah.
Is
he there too?
Yeah.
Wow. Okay.
He's about to break. Not about to, but he's got a chance to bring it to the Red Sox and the Cubs. Talk about at how
That's
old
pretty
is he?
cool.
Yeah.
Young guy.
Cool. Right.
That is really cool.
Let's get them both done. Why not?
Yeah, I'd like to
Pretty
see
cool.
that. I would, totally. You stay right there, folks. Basil's coming right up to Growl and Prowl. You have a great one, have a safe one, and we look forward to speaking this afternoon. Thanks, pal.
Thanks, man.
Wow! Go get him, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.